Business Trendsetter Podcast, where we talk about trends and how to use them to grow your business. My name is Manny Turan.
And I'm Adam Hartung.
We're Spark Partners. We're here every week to discuss all things business, all things trends. We dive a little bit into investments. We dive into the world of real estate. Anywhere where trends permeate and are part of our market, which is everywhere. And, we've had discussions regarding the future of the chip manufacturers and how that's all a kind of a big thing happening right now. Some call it the gold rush of the next century. We've talked about some globalization issues with not only with the trade war between the U.S. and China, but also the skirmish in Ukraine and things happening in Israel. And we've talked about all these things, but today we're going to kind of focus in on some investment sort of thoughts and thesis regarding the Dow Jones and why it's interesting to understand how it works versus like the S&P 500. And then we'll kind of talk about the semiconductor thing again, as it pertains to one of the driving forces of AI, which is NVIDIA, which is, of course, where a lot of the AI occurs on the hardware level. So let's start off with the Dow Jones, and let's get your thoughts on that, Adam.
Sure. So the Dow Jones Industrial Average, which we talk about all the time, every day you get numbers on the Dow Jones, was invented over 100 years ago by a guy named Dow. And he was living in New York, and he had this idea that a way to understand how well companies were doing was you'd pick like 20, and it eventually became 30, of the biggest companies that were out there that made things. And you'd blend them together and say, well, how do those 30 companies do? And what it was do is kind of the very first effort at sort of portfolio building so that investors could not just buy one stock. And he said, well, I'm going to get a group of these 30, it wasn't always 30, it used to be smaller, but became 30 companies. And then he said, at the same time, I'm going to pick transportation companies. And what I'll do is look and see how those companies do. So take 20 transportation companies. And he would say that if both of them go up at the same time, that indicates the economy is good, people are buying stuff, and that's a good time to invest in the market. So it was supposed to be an overall way to sort of assess the health of the entire stock market and give you an idea of whether investors are coming in or going out. Now, let's remember, first of all, this is before the days of BlackRock and the giant mutual funds that have billions of dollars to invest on. It was before you had giant pension funds like the California Teachers Retirement Fund, et cetera, that had billions of dollars to invest. This was when the stock market was still almost all individual investors. So there's a lot of reasons to say, hey, the theory doesn't really apply today. And I would never be a defender of the theory. But it still exists, and it still has some value to us when we look at it. And the biggest value is that as that kind of idea went forward in life, the academics got a hold of it and started saying, well, how would you try to build a portfolio? And that's when they started talking about the S&P 500, for example. And they say, well, these are the 500 biggest companies, and we're going to blend them all together and say that's one way to measure the market. The other one was the Russell 2000, and then, of course, the NASDAQ 100. And this was saying we're not going to put any judgment on this. We're just going to pick the biggest 500, that's the S&P. We're going to pick the biggest 100 on the NASDAQ, and that'll be an index that you could follow. The one thing that all of these have in common is this notion of efficient hypothesis theory, which is that all stocks are efficiently priced all the time. And it's sort of the academics like to say, everyone out there in the world knows all the information is available. And so at any given time, the stock is efficiently priced. Well, that's just a boo-hoo-hoo. I mean, it's not true because we don't have all the information. There are people that know more than we do. There's no doubt about the fact that the people with lots and lots of money, like BlackRock, et cetera, they get information that you and I as individual investors don't get. That's just that simple. Plus, there's vast, vast quantities of information. So there are people at Goldman Sachs and on trading desks that are looking at thousands of headlines every day. So they have the ability to see a lot more data than you and I as individual investors would see. So there's not an efficient market, and that's why you would see things like we saw where in between its high in 1921 and its low in 22, and then back again in 23, we saw Meta, the owner of Facebook, go from $380 to $80 to $410 in a period of about 2 years. Why? Well, obviously that's not efficient. Somebody had some bad assumptions. So people predicted Meta was going to fail, and then we're at 86. Then all of a sudden people say, oh, it's not going to fail. It's going to go way up again. So I think what we're trying to do here is we're trying to talk to people and say, look, you can be more predictive than this. You don't just follow the crowd when you're investing. and let's start to understand what we're really trying to accomplish here. And the biggest thing is people invest in companies that are relevant and growing. That's really the number one thing to remember. If companies aren't growing their revenues, if they aren't remaining relevant in the marketplace, they're not going to do well. Now, those are two separate statements. Being relevant is different than growing. So, for example, Procter and Gamble is still on the Dow Jones Industrial Average. It's not growing very much and hasn't for a long
Hmm.
time. It's been on the Dow since like 1935. Is it relevant? Well, I could say yes, it's relevant because it's so huge. In the consumer products business, it's huge. You know, it's in cosmetics, it's in toilet paper, it's all these different products that P&G has. So you can say, okay, it's relevant. You know, Coca-Cola is relevant, even though it's not the premier soft drink industry company. But what's happening in the Dow is that every once in a while they pull a company out, usually because they say that company's not doing very well,
Yeah.
and they replace it with somebody new. And so, and the same thing on the Dow Jones, the people, there's, I think 13 members of the Dow committee, and that's the Dow Jones Company, and which, by the way, owns the Wall Street Journal and is owned by Fox now. It's owned by, not Fox, it's owned by Rupert Murdoch's conglomerate.
Right.
The name escapes me at this moment, but they own Fox and they own the Dow Jones. So anyway, there's 13 people pick the stocks. So they can say, hey, look, we see Procter and Gamble is relevant, so we're going to continue to keep Procter and Gamble on the Dow Jones Industrial Average. And you know, Boeing's gotten a bunch of trouble lately, but they're like, hey, you know, if you're going to, airlines are important. I'm sorry, airplane manufacturers are
Yeah.
important because we fly a lot. So it seems sensible to them that they ought to have somebody making airplanes on the Dow, even though the company's got a struggle right now. But what happened when you look at this is that it was only 6 years ago that the people doing the Dow said, you know what? You had this company, Walgreens. The drugstore industry seems to be doing really well. They merged with a company out of England called Boots Alliance, and they said, you know, biggest guys out there in the drugstore business. Wow, okay, this would be a great company to put on the Dow Jones Industrial Average because it's very relevant, very large, and it's got growth. And immediately after that, growth stopped.
Yeah.
The drugstore companies started to do more poorly. CVS, Rite Aid, all of them found themselves finding it more and more difficult to compete. They were not able to offer everything that grocery stores start having
Right.
drugstore
Online as
inside.
well, of course.
Yeah, yeah, and online, absolutely. And in fact, a lot of insurance companies started saying, "Hey, if you're taking a drug every month because you have a heart disease or another prolonged illness, then they'll say, you know, you can't even go to the drugstore to get your drugs. We're just going to send them to you every month to your house because we have that. Basically, we're buying them wholesale and sending them to you so that you get them as inexpensively as possible because we at the insurance company are
Yeah. They're
paying for it."
paying.
Yeah, so these other factors came in and reduced the number of people walking through the drugstores. And as people quit walking through the drugstores were a little bit too big, and they started realizing, people weren't buying as much stuff. Instead of expanding the line's offering, it started to contract. And I think if you're like me, if you've been in a drugstore since the first year of the pandemic, heck, the shelves look almost empty half the time, right? So it was
Yeah, they're
what?
empty and they also offer a lot more than just drugs. I mean, it's just
Yeah.
random things now.
Yeah, yeah, and that is the problem. It's random. It's not a grocery store. It's not a Walmart or a Target, right? It's a Walmart, Target. They're going to have a lot of stuff that you want. You go to the grocery store, you get your groceries and a lot of other stuff like toilet paper and maybe your drugs that you want at the grocery store.
Yeah.
But why do I go to a drugstore? What am I going to get there? You start thinking, what am I going to go? If I don't need to go to the pharmacy, do I go at all? Right. In some states, they sell liquor, and that might be a reason to go. But in those states, generally, liquor is also sold in the grocery stores
Right.
and at other locations that are not devoted to liquor stores. So they just lost their relevancy, and when they lost their relevancy, their growth quickly shifted downward. And the people running the Dow said, "Wait a minute, this is not good. We don't like this." So what did they do? Boom. After only 6 years, and remember, most of these companies, like Apple's been on there since 2015. Microsoft's been on the Dow Jones Industrial Average for like 20 years. Like since back when Microsoft launched Windows, they've been on the Dow Jones Industrial Average. So if you can kind of keep after it, even if you have a decade of bad years like Microsoft did under Ballmer, that was like 12 really crappy years where the stock went nowhere. But hey, Windows and Office were still really dominant software
Yep.
pieces. Were still really important. Sales weren't growing, but hey, it was important. So they stayed. So when you're only there for 6 years, that's basically the people in the Dow saying that the 13 guys that make the decision saying, hey, we
We
missed
made a
it.
mistake.
Yeah, we made a mistake. And so what did they replace it with? Amazon. So what you could take away from this is, again, the people that are trying to select something for the long term are saying we think Amazon's a long-term player with the combination of retail and cloud services that they provide today, plus other things that they're getting into, trucking with the home delivery service. We think that this could be a really good long-term play. So, so in that regard, I would generally say that when somebody gets added to the Dow Jones Industrial Average, that's a good sign that fairly conservative people that talk to folks with billions and billions of dollars to invest are saying this is probably a good long-term play. They may not be the fastest growing, but it's a good long-term play. And so I think that's important for people to understand that you probably, if you had thought about drugstores, this would be a good time to sit back, reassess, and say, not only Walgreens, but should I be invested in any of those? And because of the discussion you and I just had, probably not. It's not a growth business; it's a declining
Right.
business. In overall retail, which we know retail overall, brick and mortar retail is declining, right? And if you say, well, okay, what about Amazon? I would say, hey, they're saying Amazon's a good long-term play here. And I try to pick these early in the life cycle, like when they got into Apple in 2015. If you go back to kind of what the world was like then, well entrenched with the iPhone, things were growing, lots of new apps are coming along. So they're kind of looking down the road saying, we think this is going to go good for 10 years. So I would say if you've been an Amazon investor, hang with it, right? Because this is a vote of confidence
Yeah.
among people that influence lots of big money. Again, come back to this again. These people that pick these, it's not just that they get the right to pick it, but it's they're talking to people with
Hmm.
billions to trillions of dollars to
Yeah.
invest. And they're influencing those people to think about where they want to put their money. So I think that's important.
Yeah.
Now, at the same time, and nobody pays much attention to the Dow transports anymore. It was so if you go back to the Dow Jones Industrial Average, back when it was started in, companies like Pittsburgh Lead, and I mean companies that you wouldn't even coal companies and things that aren't even really an important part of our economy anymore. And they've upgraded that as you can tell. We now call according to them, Microsoft's an industrial company, Apple is an industrial company, Amazon is an industrial company. Um, Chase Manhattan, J.P. Morgan Chase is in the Dow Jones Industrial Average. So they've added financial companies, they've
Hmm.
added other people in that. And I don't even know how they defined industrial anymore as they do that. Go over to the transport average. It was all railroads when it was founded. It was like how much stuff is being moved on a railroad. You go look now, there's two railroads left on it, right? CSX and one other one. And it's a lot of trucking companies.
Yeah.
Makes sense, right? The major airlines, United, American, Delta, and Alaska are all on the transport average, right? There's one technology company that supports the transportation industry. And now this week, they also added Uber. They took JetBlue off the list. And as you know, JetBlue and Spirit have been trying to figure out a way to get together because that low end of the market isn't making any money, hasn't
Right.
made any money. And so, what's it going to be longer term? The question then they took JetBlue off and said, we're going to put Uber on. Now, most people would think of Uber as a technology company, right? They try to match up assets like drivers with people that need a drive. Right? And the kind of the technology base under Uber is getting somebody that has free time to deliver you
Right.
groceries or
It's
somebody.
like a glorified dating app, essentially.
Yeah, for sure, very short term transactions, right? They're trying to match people up. So the underlying, it's a technology company in that regard. It's all software in terms of what they do. The drivers don't work at Uber, right? They're independent contractors. They're gig economy, something we talk about a lot, right? The assets, which are the vehicles, they aren't owned by Uber. They're owned by the people in the gig economy. So it's really a software company, but now it's on the Dow Transport Average. So that's them saying who's really relevant when we take a look at what's happening. And they're saying, well, JetBlue isn't relevant anymore to the marketplace. We don't, we've so consolidated the airlines that these low end Spirit type airlines are a come and go matter. They're not the kind of place you want to invest. 15 years ago, JetBlue was an airline that you flew as an alternative. When you'd say, I just don't like the way they treat me on United. I'd like to have better service. I'd like to have good food. I'd like to be able to, like the seats to be a little bit further apart. All of those things that would attribute to the experience of flying. JetBlue had a good experience about that. They were also one of the first to use online check-ins and some of that technology. Well, time goes by, they don't keep investing, and they'd start lowering price, and they start shrinking the seats. They quit giving you the food, and next thing after a little bit of time, they've fallen into being a low-cost airline.
Yeah.
And low-cost airlines are not a growth business, so you don't want to go there. So I
Yeah.
think that's what's really kind of important to try to understand is that it's not just you and I, Manny, that talk about the importance of growth. It's also these other big investors.
Hmm.
Now, if you're really big with billions of dollars, you want to say, okay, they're relevant because I don't want them to be something that could disappear out from under me. So they get scared about somebody like Meta or Facebook. They don't get worried. Well, could just people quit using Meta overnight and go to TikTok? That's the kind of thing they worry about. I don't think that's true. That's my opinion. And when I talk about trends, and I think they miss it. But they're saying they're still worried about trends. They start with what's the big and relevant, and
Hmm.
then they look at trends, saying, "Well, will it grow?" I think for us and our listeners, one of the things is to say, where are the trends? And
Yes.
to get there early, because you're not going to be able, you don't want the rates of return they get. They're happy if they get 6, 7, 8% rate of return. We're looking as private investors to get 10, 11, 12% rate of return. To do that, you have to identify the high growth companies that are going to become relevant.
Right. And I think that backdrop is what we talk about, right? That's exactly what we talk about is these trends. And I think sometimes the signs are big neon signs on the headlines, and sometimes the signs are more subtle. I
Yeah.
think Walgreens falling off the Dow Jones is potentially a subtle but not subtle message that what, this is changing. We've talked about the decline of retail. We've talked about the increase on the what's happening at Amazon and how they're dipping their toe into the wellness space as well.
Yep.
And I
Yep.
think it's just important to read the clues and think about trend casting from blending trends. We've talked about this a few times as well, how it's really important and powerful to not just look at things in a singular fashion, but blend in other large trends like demographics, right? As the population gets older, they're not going to go and dying off. They're not going to go to Walgreens. You're going to order things
Yep.
online because you're used to that.
And it was Walgreens that made the big investment in the young lady in San Francisco that had the blood testing machine. Remember Theranos?
Theranos, yeah.
Yep. They put a lot of money into that too early. They didn't do the right due diligence. They didn't do enough effort to pay attention to the technology. The leadership of the company didn't listen to their own people inside the company that questioned the efficacy of what was going on. So that was a bad decision on their part. But what we look at is what they were trying to do is say, could we give you an alternative source of medical aid so that you would come into the store? Would you come in for blood testing to get diagnostics? Would you, and I've tried, would you come in to get, instead of seeing a doctor, you could see a non-doctor healthcare professional to perhaps diagnose if you have the flu or if you've got something worse than the flu, right? To deal with first level indicators. And none of that's worked, right? And what that starts telling you after 6 years is, hey, you don't have a good market sensing system. You're not actually paying attention to customer needs and the unmet needs. So you're sitting there, they're getting their healthcare provided, but you haven't come up with an alternative that is effective and cost efficient that would be acceptable. And that's true. I mean, the problem is, I think of all these, there are alternative ways to deliver healthcare. We see it in other countries outside the U.S. But what we don't see is we didn't see Walgreens, CVS, Rite Aid, or any of those companies become a leader in terms of listening to the customer and getting there first. So
Mm-hmm.
consequently, even though there's trends happening, they became way off the trend. They're over here, trying to do some wild things, but they're not doing them because the customer's asking for them. They're doing them because they think it's a great idea. And that's a big problem that we often run into with entrepreneurs. They think, oh, that's a great idea. I'm going to go do it before they identify what's the unmet need and does this really meet an unmet need, right? But we see Amazon doing a pretty good job of listening to customers and coming out with more solutions to meet unmet needs. So therefore, they're still a growth company. They're still doing well. Right now, today, there's some concern about Apple. People are saying, hey, you had the iPhone, and we haven't had anything new since the iPhone, just a lot of apps, a whole lot of apps, which have been good, very beneficial. But it is a bit of adding, brand new kinds of razor blades to the same old product, right? And so Apple hasn't been doing all that well lately. So what do? They're launching the VR headset, right? The
Well,
Apple.
that also they've also talked about the car. That
Yes.
should be interesting.
Well, yeah, if it happens. But see, people lose faith. People are sitting back now saying, well, we didn't see that much happen. And we're seeing people turn cars over and set them on fire. Autonomous vehicles are getting set on fire in San Francisco by angry citizens. We're not sure the whole autonomous car thing's going to be all that great of a deal. I mean, Waymo's pulling back out of the market. Autonomous cars look like something that we ought to have, but it's running into a lot of problems. Is that trend going to remain? That's the way the big investors are looking at it, right? And so what's Apple's game? Well, Apple isn't clear. They haven't come out and said, well, this is what we can do to try to help advance that trend that people do want autonomous cars, but we haven't figured out how we're going to add to that trend. So like I said, recently they launched the Apple Pro VR headset. I've done a lot of looking at this. One thing that I've learned is that anybody who deals with technology says, wow, this is some hot stuff. This is hot stuff technology. 12 cameras in it, really good sensory experiences. You can actually use it like a computer with a pretend keyboard, in front of you. There's a lot of things you could use it like a computer that's attached to your face. Okay, good. Cool technology. What's the killer app? Don't know yet. So
Yeah.
Apple's not getting any credit because it's like, hey, Meta launched a VR headset, right? And it never really developed that great killer app. Now, I did see something last week where somebody got a hold of this in a very early stage beta product, and they've developed a flight simulator using the headset and some mechanical devices that aren't much bigger than a stationary bicycle. So that you can sit there and it moves all different directions, and the headset gives you a very, very real feeling of flying a helicopter. And they're saying this could revolutionize because this thing costs like $50,000 to make, whereas a flight simulator costs more like $1 million to make.
Mm-hmm.
And the cost per minute is a fraction in a simulator than it is in a flight simulator. Hey, that's pretty cool, and I hope that the FAA comes along and says, that's cool. Yeah, we think it's good enough that it's a flight simulator for good training, at this point down the road. We need that to happen. That's what happened with the apps in the way of the iPhone. We started getting more and more valuable apps, and then doctors could use it to look at x-rays and all kinds of things. That's what we're looking for here. And
Right.
Apple has to come out with that to say, hey, we're going to make this new technology another growth platform.
Yeah, and I think this is a good segue to actually talk about some of the underlying technology that's driving this. And, one of the major trends that we've discussed ad nauseum, but we will continue to discuss because it's so, not only is it's pervasive in our everyday life, but it's going to grow even more and more. I mean, what we're experiencing now with AI is the tip of the iceberg.
Oh, yeah.
And that, of course, is, a couple things. The one, Sora, we talked about that in our pre-meeting, but also the discussion regarding NVIDIA and the hardware powering the AI revolution. Intel, we can talk about Intel. I know a lot about Intel. So let's start off with Sora, and then let's go into NVIDIA.
Yeah, so Sora, which was launched, it's not available to the average consumer right now. It's only available to a select group of professionals, but it allows you to use verbal prompts the way you would do for ChatGPT. So you give ChatGPT the verbal prompts and they shoot you back a report, right? A paper, you ask them to do something. This, you give it verbal prompts and it shoots you back a video up to a minute long. And I haven't gotten to see it yet because it's pretty new stuff, but everybody that I've read it through, okay, so all of the reviewers who have written something say that it's remarkable, that it's professional quality video. And the segments, whereas some of the earlier segments using AI were 10 to 12 seconds, is a full minute long. And so they're saying, hey, this is a way that you could pre-make like a television commercial for screening, right? Or you could go out and we could make videos for things that we do with clients and put them on YouTube so people could have an experience or see what we do with clients. But instead of it being a real client where we would have to be divulging proprietary information, we could do it with fake clients. And we'd say, okay, this is a fake experience, but it demonstrates what we do and shows how we interact with our clients in action. So again, this is pretty powerful. I mean, I got 25 years ago, I grabbed some leads in certain marketplaces because I was good at using social media, good at blogging, good at writing, good at getting a message out there, right? And I quickly started realizing that to create enough content, we have to start continuing to use AI to create more content. I can't do it all by myself anymore.
Yeah.
Well, what did you tell me? 5 years ago, you and I became partners, and you said, Adam, you can't write it all. You got to get it on video. And you started us down the road of podcasting. And so now we've been doing video because that's really where a lot more people are. Well, now what we're seeing is you and I can start to use Sora as soon as it's commercially available to help us get more of our videos out there.
We will.
Yeah.
We will. And I think the real name here is that you can look at it from both sides. And of course, we briefly spoke about the Screen Actors malarkey with the whole chat GPT. And we can see this as like the sky's falling. We can see this as the, we've got this disruptive technology that's going to decimate an industry, or we can see it the other way around. I mean, if you imagine some horse guy back in 1910 seeing an automobile for the first time, they had no idea the breadth of what the automobile experiences. Car shows, part of the American culture, now autonomous vehicles, electric vehicles. I mean, just the totality. Now this is happening in the video space with cameras, with editing software. Now we're going to this new thing, and we can either be scared of it and push it away, or we can embrace it and see how we can actually use it to our advantage.
Yeah, and again, it's growing really fast. I pulled up some reports on this. The overall market projection is for 38% per year growth in AI applications, which makes it into a $2 trillion industry in the next 8 years. I'm sorry, a $3 trillion industry in the next 8 years. And I mean, the thing here is get on board. It's like I always said about, using the internet. Get on board. It's like I say about hooking up with Amazon to fulfill orders. Get on board. These things are like rivers, runaway rivers right now, with people jumping in there, using them, doing things, and there's nothing to wait for. I mean, what are you waiting? Why? I mean, I can't understand that. You get in there and make something happen. So there was a lot of NVIDIA is the number one manufacturer of AI chips, and they've grown, or they were growing at sort of a 20-30% rate. They had a down year last year, but the reason they didn't grow, I don't think they shrunk, but they didn't grow very much. And the reason was they couldn't make the chips. They had so much demand they couldn't make them. They had to bring on some more production. Well, they did that, and their revenues tripled this year. So coming into their earnings release, which happened this week, there was a lot of skepticism. Well, what is NVIDIA going to say? We don't think they'll do all that well. The price has just escalated tremendously for this stock. It's already won a $1 trillion company in this very short period of time. A lot of analysts were pretty negative. Well, they came out and just blew everything away. Tripled their revenues this year. Tripled their revenues. That's a 300% growth rate in 1 year on a company that was already a multi-billion-dollar corporation. And it's just an indicator. Now, am I saying buy NVIDIA stock? I cannot recommend stocks. I'm not a financial advisor. But I would say, hey, this is the number one game in town. It looks an awful lot like Amazon looked 30 years ago, right? So I would give that some serious thought in terms of your personal portfolio. But more than anything, what I would say here is, look, these chips are getting sold in vast numbers.
Right.
And that's even after they've restricted the number of chips that can go to China as part of the whole legal situation and the government situation in terms of how much trade we want with China. They've restricted what NVIDIA can do. So the Chinese market is much smaller for NVIDIA than, say, the Chinese market is for Apple. And yet they're still growing at 300%. Yeah.
What's interesting is I just learned that, Intel and NVIDIA had been talking about partnering for about a year now.
Yeah.
Just learned that a couple of days ago, Microsoft turned to Intel to make their chips, not NVIDIA. So this is a dynamic market, right? You got to keep your hands on the eyes on the ball, because it can move very quickly from one hand to the other.
And again, I would look back at this when OpenAI fired the head of the company, and OpenAI, again, the company that controls ChatGPT, when they fired the head of the company and he was walking away, and there was all like people that work in the company were going to walk away. It looked like a giant disaster. Microsoft stepped in and said, hey, we'll just hire y'all. You can become part of Microsoft. Well, over the course of the next couple of 3 days, everybody kissed and made up, and they decided that they would keep OpenAI as a company, and the CEO would go back into OpenAI in his job. And most of the senior execs that quit said they'll come back into the company. But the big thing was a big shot of money got put in by Microsoft, and Microsoft is now a much bigger player in the game with OpenAI. So the ChatGPT and the Sora is now something that's accessible by Microsoft very early. They're getting to it. So they're sitting there saying, we're going to grow. And I think that, again, you got to look at this. As I know, that during the Ballmer era, I was extraordinarily negative on Microsoft. Overinvested in Windows and Office, and underinvested in other things they had, like Ericsson phones and Skype for the communications. And they've underinvested in everything else. Nadella has changed that around now. He's gone after cloud services, and now he's going after AI. And from what we can see on the outside world as small investors, you and I, and our access to data, it appears as if Microsoft's making a much bigger bet, bigger claim than Apple or Facebook. And so that's why right now investors in like the Apple stock isn't particularly going anywhere, but Microsoft's doing much better. It's because they're looking and saying, where's the market going to grow? Where's the trend headed? It's AI. Who's going to benefit from AI? It's NVIDIA. It looks like it's going to be Microsoft. And then Microsoft turns around and says, you know what, we can't rely on NVIDIA for all the chips. So we need to start looking at how we would get our own manufacturing. Well, let's go to Intel, who's got certain skills, and we can bring them those additional skills. And perhaps we can end up in a competitive market where there could be NVIDIA and Intel, making products for a lot of people. All of which is going to get, again, keep in mind, getting subsidized money from the Inflation Reduction Act, the CHIPS Act, and all this money going to like your home state of Arizona to open these plants. So again, what are you waiting on?
You got to jump on that bandwagon. It's happening, right? You can't hold it back. Why not jump in?
And I really encourage people, if you're not using Chat GPT, once a week to just exercise it and find something out about it, you should be. And you need to keep your eye on Sora. I think that's going to be really interesting. I can't wait to give it a test drive. Just one last piece about this test driving and working with stuff. Last weekend, I took the opportunity on Friday, Saturday, Sunday, and Monday, President's Day weekend. I drove over 30 electric cars. I went out and had the hands-on experience at the dealers. I drove electric cars, and it just really wanted to go panoply around this and say, I want to get my own impression of how this works. And, it's something that you ought to do. And the one thing I walked away from this was that anybody else that ever tells me that they prefer a gasoline car has not driven enough electric cars, because they are not identical. They vary, but the performance characteristics of electric vehicles are just so superior to the performance characteristics of an internal combustion engine vehicle. And the cost per use is so much lower that I'm really struggling now. I cannot imagine that I would ever put a dime in purchasing a vehicle that had a standard gas-powered engine. It would be electric. Now, which one I would buy, I think that depends a lot on who you are, how you're going to use it. There's a whole lot of factors. Right. But I will come back again and say the tide has turned. The technology is so superior to the technology in an internal combustion engine. It's like using an abacus compared to using a laptop.
Well, I must admit, Adam, that I haven't done that. And with my lifestyle, going on these multi-day expeditions out in the woods, I may be a little bit of a laggard in that, but I definitely will take you up on that offer for my in-town commuting at some point in time. And so, any last thoughts before we wind down the podcast for today here?
Well, I just hope everybody keeps in mind that what we're trying to say here is that success comes from being relevant, and if you jump on a trend, you get relevant quick. The trend helps you grow. The more you grow, the more relevant you become, and the more successful.
Very well said, Adam. Very well said. With that, we'll end today's podcast. We'll be here next week to have more discussions. We might even have a guest, which will be interesting. And so with that, Adam, we'll talk to you later.
Thank you very much.
Cheers.